You know the gut-wrenching feeling when your carefully built portfolio starts bleeding under relentless inflation? That sick twist in your stomach as you watch your money lose real value every single month, every single day, while the markets keep screaming, "Stay calm, it's all under control." But is it? Number. The truth, inflation is a ruthless, invisible tax stealing your future, your dreams, your legacy. And most safe investments, they're like leaky boats in a storm. They promise protection, but slowly sink you deeper into uncertainty and loss. Listen up, because this chaos is no accident. It's engineered complacency. You're told to diversify, to hold bonds, to buy stocks, to brace and wait. But without the right tools, waiting means decimation. And that's why inflation-protected bonds, they're not just a line in your portfolio. They can be your frontline defense if you use them right. But few really understand how. So here's what you must do, and do it now. First, stop thinking of inflation-protected bonds, TIPS if you want the jargon, as boring safe havens. That's a trap. They're weapons, precision instruments designed to keep your purchasing power intact when prices go wild. When inflation surges, these bonds' principal value adjusts up, paying you more so you don't lose ground. But here's the kicker. If you just blindly buy tips and hold like they're your sanctuary, you'll miss the bigger strategy and risk underperforming when inflation cools down. Use them badly, and you get a slow bleed anyway. Now here's a brutally honest truth that terrifies the traditional investor. The US government's measure of inflation, the Consumer Price Index, CPI, is flawed, lagging, and often understates the real erosion happening, which means TIPS tied to CPI are a baseline cushion, not a total shield. You need to anticipate the real beast before it roars. So obsess over early indicators, commodity prices, labor market tightness, supply chain disruptions, and be ready to ramp your allocation to inflation-protected bonds before the panic sets in, not after. Get this. Allocate between 15% to 25% of your portfolio to tips when inflation signs start flashing. Too low, and you bleed. Too high, and you cap your upside when inflation falls. It's a precise balance, a tactical placement, not a knee-jerk reaction. But don't stop there. Layer your TIPS exposure with shorter maturities. The temptation is to lock into long-term bonds for maximum inflation adjustments, but long durations leave you vulnerable to rising real interest rates that crush bond prices. Shorter duration tips add agility, protect you from rate shocks, let you re-enter at better yields faster. That agility is gold. Then there's the overlooked secret weapon, leveraging TIPS through bond funds that actively manage inflation sensitivity. Don't park your cash in static bonds. Hunt for nimble managers who zoom in on inflation trends and reallocate dynamically. Watch the fund's inflation break-even rate, real yields, and credit quality with laser focus. Ask, is this fund positioned to thrive if inflation spikes tomorrow or next quarter? If not, find one that is. Your capital deserves no less. Here's the next revelation. Inflation protection isn't a solo venture. Pair tips with growth assets that historically crush inflation. Real estate investment trusts, REITs, commodities, energy stocks. But, and this is huge, avoid the trap of mimicking the herd's usual allocations blindly. Those sectors' inflation correlation is noisy and inconsistent. Instead, focus on crisp, data-driven choices. Commodity sectors with structural supply constraints, REITs, in geographies with rising rent indexes, not just headline numbers. Hedge smart, hedge precise. But don't just hedge blindly. Remember, inflation crushes certainty. It kills the promise of future cash flows, disrupts assumptions, shatters projections. So your portfolio needs recalibration constantly. That means set alarms on your macroeconomic dashboards. When core inflation ticks above your personal threshold, say 3% annual, you double-check if your inflation basket is weighting properly. If it's lagging, restructure. Do not wait for your portfolio statements to confirm losses. Act with aggressive preemption because waiting is surrender. Feel that frustration? That gnawing anger from seeing wealth vanish? Harness it. Channel it into ruthless action. Here's your command. Build a mission-focused watch list of inflation-protected instruments. Pick government tips, but also dive into inflation linkers from other issuing countries: Canada, UK, France. Why? Because inflation is global and sovereign credit risk varies. Getting exposure to global inflation linkers might carry currency risk, but the correct hedging steps neutralize that. Diversify your protection, not just your risk. Understanding what moves inflation is your new obsession. It's not just the headline CPI, it's wage growth, it's raw material shortages, it's policy moves. Watch Federal Reserve signals like a hawk. When hawkish tones ramp up, long-term TIPS prices get crushed. Opportunity awaits. Be ready to buy when fear peaks and sell when complacency returns. Inflating and deflating markets are your playground, not your nightmare. Most importantly, reject the illusion fed to you by experts claiming that bonds are just dead money. Inflation-protected bonds, when deployed with precision, are a fortress inside that chaos. That fortress is not built with comfortable ignorance, but with sweating, relentless strategy. This is where the liberated investor breaks free from old-school investing rituals and builds real, dynamic defense. And finally, never forget, you play in a global game, beyond borders, beyond the status quo. Inflation doesn't care about flags or politics. Your wealth must be nimble and armored, transcending outdated financial dogmas. Build your fortress with the best tools, but keep your vision sharp. To lose ground in inflation is to lose freedom. To master these bonds is to carve your place as a true architect of your financial destiny. No more waiting, no more hoping. Act with fire, with precision, with ruthless clarity. Inflation will burn those who hesitate, but you'll turn its flames into fuel for unbreakable growth. Now rise, adjust, fortify. Dominate your portfolio's destiny before the next wave of inflation crushes the lazy and rewards the prepared. The time to wield inflation-protected bonds with surgical power is now. Don't just survive, transcend.